chill lo-fi. I'm gonna just make sure that I have a thing that's, this is like some 2018 stuff. Anyways, let's get back. All right, so we had a manipulation and a distribution. Once again, we see a bit of a manipulation, and what I'm expecting it is to pull back down towards the weekly fair value gap. So weekly fair value gap is actually down here. You can see that this is a weekly fair value gap, and it still hasn't been like properly mitigated through, so it's still valid. So I'm expecting to pull back. You have this manipulation work, we're distributing towards this low and then retracing higher. So I'm expecting price to sort of, so this is the 4-hour fair value gap. Seems like it's still using the 4-hour fair value gap as a support level, but I'm not really depending on that. Okay, all right, cool. Let me just make sure this is smaller. Okay, so you see that this seems to be using this as a, you see the thing is, okay, so over here we use this as a what, manipulation. Okay, we have the manipulation right here, and then we have the distribution. See, so what do we see next? We should have a distribution. It seems like we're going to be sweeping liquidity once again and then go higher from there. So I think I still could, if there is enough momentum, I could take my chances to the buy stops towards this draw. Let me refer to my strategy. Oh no, let me see if there's any order flow. So we have this wick. Seems like we're backing up to go lower though. Yeah, see, like if this is closing here, this is going to be where is it? Say market structure into terminal, but we know this is going to be order flow. So it's pretty simple in that sense. 1, 2, 3. Right? You see this? So it's using this as a support level, sort of to create more of these and go lower and lower and lower. So yeah, that's pretty cool. See these 1, 2, 3s. Use this level. Once again, it's testing this level. Alright, it's not really testing this level. It's sort of consolidating in this area. So it's not really proof, but it seems like this proof to move lower here. So price seems to be retesting this level. Let me actually, oh, there you go. So New York took out the, London took out the, London was consolidating properly. New York took out the lows. Let's look at Forex Factory real quick. Crude oil inventories, okay. It's not that bad though. Okay. I gotta take this trade from here to, if I get a proper fair value gap from around here. As long as the ratio is not that bad though. Like, at least if I can catch a 2, that's when I would actually take this trade. So it seems like it's, because if you look at it like this, we have a breakaway gap, right? There's a breakaway gap right here. So unless this uses this as a support level to sort of retrace lower, which is also possible because we took out these lows, the sell side liquidity was taken out, but this wasn't taken out. So yeah, we might retrace a little bit higher and continue to go low, because overall we seem to be at the consolidated phase of our model. I'm not expecting to make my sense. I don't think I would take the trade all the way down there though. It's gonna be, I could technically short from here, targeting these highs towards at least here. The only problem is I don't really have a specific draw, you know. So right now, I need to see what sort of reaction happens at the 15-minute fair value gap. I want to see what sort of reaction happens here. So using this, there you go. It seems to be like, it seems to be that it's using this. Let's see what the, so it's using this level. Just get rid of that for now. So it seems to be testing this level, so it seems to be validating the idea though. This is the 4 fair value gap, so I don't really want to like debate between like what's gonna happen. But safe to say that it's gonna probably just like go lower. Because we had a key manipulation and we have a distribution leg now. But this price action is just a little inconsistent, you know? A little inconsistent. It's fine, it's fine. I just need to backtest a lot, but if I backtest a lot and have a lot of data, then I can like be confident. I just can't backtest because of my dog shit comment. So I'll make sure I get my subscription, and then after that I can backtest. So I didn't watch the RG video again.
Sky, just fucking moon from the bottom. We went up 20.
Let me just watch this.
Maybe we close the candle here, and then the next candle opens with a volume balance, right? So these are but just generally speaking on what manipulation is. So what do we look for when price is manipulating, right? So the first requirement for manipulation, good manipulation that you can look to trade against, is going to be a clear range or direction the market is trading in. So for example, let's say we have some consolidation, right? Some pretty, sloppy, and we pop out, maybe we're up here, we have some equal lows down here, some equal lows here, and we have some equal highs here. So we're just kind of boxed in by these, let's say the bodies are like down here, so we're kind of boxed in this little range here, and we got some wicks at the top. So for a bullish manipulation, you want to see there's clear targets on one side of the range, and there's clear targets on the other side of the range. So you might, let's say for example, you trade an IFVG system like I do. Maybe there's an inverse value gap here, and maybe you take this inversion, right? So let's say this low is a little bit, this goes a little lower, so that we take out this low inside this range, and you take this IFVG pushing for these highs, right? You're gonna get chopped because there was no manipulation in the range. There was no manipulation outside of the range. Sorry, there was only just an inefficient.
No manipulation outside the range. Right.
Inside the range,
okay.
You're gonna get stopped out down here, or you're gonna stop break even if you move it super fast. You're not going to be able to efficiently trade this price action. So what you want to wait for is manipulation, right? So let's say we're trading inside this range, and all of a sudden we shoot out the bottom, right? Let's shoot out the bottom, and one thing we want to clear. So let's write criteria here. Excuse my handwriting. So first criteria for good manipulation is displacement. And displacement, if you're not already aware, is if we have displacement basically just means the price move, which creates some inefficiency along the way. Let's say this is a fair value gap, and maybe we close the candle here, and then the next candle opens with the volume balance, right? So these would be inefficiencies, which count as displacement through some level.
Displacement, okay.
The levels right here. Okay. So that's our first criteria, displacement. Okay, so we want to see displacement outside of this range, down underneath. Okay, so now we've got displacement, and we sweat sell side liquidity. That's the second criteria. It's going to be taking liquidity, or I guess we can get a sub criteria, taking liquidity, because you want to see the liquidity being taken as price displaces. Okay, so price displaces down here. Okay. Now let's say we have some inefficiency right here, we have some gap. Now we've taken the liquid down here, and it looks like we're going down, right? Oh, we just consolidated. Oh, we just broke out down to the bottom, right? You have to get yourself out of that school of thought. A lot of new traders, myself included, I always used to look at it like this. I would like literally my first strategy write up. In fact, the first time I ever tried to write up a strategy back like 2 months into trading, not even trading, like literally just learning. I barely even traded at that point. I just had an eval I didn't trade on. I wrote down, I was like, look for a displacement through a level, and then a fair value gap to trade back into, and then continue that way. That's what I thought. So I was always getting caught in manipulation. I took so many losses because what would happen was I would be like, oh, like for example, I started with the 2022 model, and the 2022 model is entirely based around manipulation. The issue is
the fuck?
What would happen was I would be like, oh, like for example, I started with the 2022 model, and the 2022 model is entirely based around manipulation. Entirely based around manipulation.
When choosing the stop hunt, market structure shift, and stop hunt, market structure shift, pullback entry formula. Oh, so he wants to go for a market structure shift, and as soon as it pulls back to like a fair value gap, it like takes the short. Stop hunt is the manipulation I'm talking about. Right, let me just take note of this. I'll take note of this real quick.
The issue is, it's not clearly defined. I mean, at least it wasn't for me. Maybe some other people got the memo, but me personally, it wasn't very clearly defined. I didn't actually have a proper understanding of what manipulation was. So I would try to short these kinds of gaps and try to take price down. And every single time, boom, blasted through, stopped out, right? So I was like, what the hell? Like, I don't know what's going on here. It took me a long time to figure this out and a whole strategy switch, right? I'd stop using the 2022 model for entries, or at least the fair value got pullback. I guess the 2022 model is pretty generally applicable. That's not super relevant. So basically, we have sell side liquidity. We have clear targets on the other side. Let's put that as second criteria because clear targets are also important. So after we've displaced through this low, took liquid, now we want to see that price has left some clear targets for us. For example, right here, price has left equal highs. Okay, so price leaves these equal highs, which is a very high probability draw on liquidity. We've got 3 clear targets on the other side. Let's put that as second criteria because clear targets are also important. So after we've displaced through this low, took liquid. Now we clear targets on the other side. At least the fair value got pulled back. I guess the 2022 model is pretty generally applicable. That's not super relevant. So basically, we have sell side liquidity. We have clear targets on the other side. Let's put that as a second criteria because clear targets are also important. So
we displaced through.
after we've displaced through this low, took liquid. Now we want to see that prices left some clear targets for us. For example, right here, prices left equal highs. Okay, so price leaves these equal highs, which is a very high probability draw on liquidity. We've got 3 highs that are pretty close to each other. There's going to be a lot of buy side liquidity stacked up above these highs, right? Everyone's putting their stops up here. So now what we want to do is we want to watch price displace back through the previous leg. So we want to see consolidate, steep drop, or steep, it could be opposite. I mean, just inverse this if you want a bearish model, right? It's applicable both ways, just some vice versa shit. This inefficiency wants to be violated. Okay, so let's say there's a candle close right here. Okay, this candle closes above this inefficiency, which would be an inversion fair value gap. In this case, if this was a fair value gap, this would turn into an IFVG, inversion fair value gap. And that is a strong sign that price is going to continue going up here and take out this buy side liquidity. Okay,
right.
For example, for a strategy like IVG, I learned this from Dodgy, and this is a strategy that I found super intuitive to myself. This strategy is 100% dependent on manipulation. It's so important. You can't have an IVG without manipulation, right? So if you're looking to trade IVG trades, make sure you have a good understanding of manipulation. So for the second criteria, we want to have a good target.
If you're looking to trade IFG, make sure there's a manipulation.
You can't have an IVG without manipulation, right? So if you're looking to trade IVG trades, make sure you have a good understanding of manipulation. So
make sure you have a good understanding of price manipulation if you want to trade IFGs. Basically what he's talking about is on a high time frame investor value gap, this should be a low time frame manipulation. Basically a sweep, in other words. It's like confirming theory. So let me see if that's, let's go back in time. Let's go to like here. Alright, so of course it's not this fair value gap. Okay, let's go for a more clearer option, I guess. So let's look at this, for example. So it's fair value gap, right? So I think he's talking about like the manipulation, and I don't exactly get what he's talking about. I think he's talking about this, like this manipulation before the fair value gap is used as the inverse fair value gap. So you see like over here, it's using this, like go lower. But then does that? Oh, it's confusing. Let's say this is the inverse fair value gap at this point. Okay, the bounce price range. Alright, so let's go back. So the sweep was technically, I mean technically we had this sweep above, so I guess that's what he's talking about. The sweep and boom. I think this is what he's talking about. Sorry, my bad. Alright, let me copy this and paste this on alright, I'm on. Alright. Back to my grind, yes sir. Seems like we're tapping back in for value gap. Are you sweeping liquidity? No, I don't think we're sweeping liquidity. It's just sort of headed towards that. You tap back into it, then you go lower. Go do that. You could in fact do that. Yes, that's right. See? If you take it towards this ratio, then yeah, for sure. It's like a 1.87. You know, if you take it up to like this, you know, that's crazy. That's crazy.
For the second criteria, we want to have a good target. Might be kind of all over the place. Sorry if I'm kind of all over
So taking liquidity,
the place. I'm literally
displacement is basically like, you see this fucking displacement move.
taking this off the top of my head. I had no plan. Okay. So criteria for good manipulation, we've got displacement in the other direction, taking liquid, and then we've got a good target, and we've got violation of inefficiency.
Violation of inefficiency, right?
On the manipulation leg, okay?
Oh my god, bro.
So we'll go into some chart examples in a second. But these are going to be the 3 criteria you're going to look at for manipulation. Okay? For range manipulation. And this is generally applicable, but this example right here is a range manipulation, okay?
As long as this has a proper...
No plan. Okay, so make sure you have a good understanding of manipulation. So for the second criteria, we want to have a good target. Might be kind of all over the place. Sorry if I'm kind of all over the place.
Displacement.
This one literally is a fair value gap. This would for entries, or at least a fair, clearly defined. There's always been caught manipulation. I took so many losses because what would happen was I would be like, oh, like for example, I started with the 2022 model.
Displacement, you take the liquidity, and then you go lower. Yep.
And the 2022 model is entirely based around manipulation. The issue is, it's not clearly defined. I mean, at least it wasn't for me. Maybe some other people got the memo, but me personally, it wasn't very clearly defined. I didn't actually have a proper understanding of what manipulation was. So I would try to short these kinds of gaps and try to take price down. And every single time, boom, blasted through, stopped down, right? So I was like, what the hell? Like, I don't know what's going on here. It took me a long time to figure this out and a whole strategy switch, right? I'd stopped using the 2022 model for entries, or at least the fair value got pullback. I guess the 2022 model is pretty generally applicable. That's not super relevant. So basically, we have sell-side liquidity. We have clear targets on the other side. Let's put that as a second criteria because clear targets are also important. So after we've displaced through this low, took liquid, now we want to see that price has left some clear targets for us. For example, right here, price has left equal highs, okay? So price leaves these equal highs, which is a very high probability draw on liquidity. We've got three highs that are pretty close to each other. There's going to be a lot of buy-side liquidity stacked up above these highs, right? Everyone's putting their stops up here. So now what we want to do is we want to watch price displace back through the previous leg. So we want to see consolidate, steep drop, or steep, it could be opposite. I mean, just inverse this if you want a bearish model, right? It's applicable both ways, just some vice versa shit. This inefficiency wants to be violated, okay? So let's say there's a candle close right here, okay? This candle closes above this inefficiency, which would be an inversion fair value gap. In this case, if this was a fair value gap, this would turn into an IFVG, inversion fair value gap. And that is a strong sign that price is going to continue going up here and take out this buy-side liquidity, okay? So for example, for a strategy like IFVG, I learned this from DOGSHIT, and this is a strategy that I found super intuitive to myself. This strategy is 100% dependent on manipulation. It's so important. You can't have an IFVG without manipulation, right? So if you're looking to trade IFVG trades, make sure you have a good understanding of manipulation. So for the second criteria, we want to have a good target. Might be kind of all over the place. Sorry if I'm kind of all over the place. I'm literally taking this off the top of my head. I had no plan. Okay.
Taking liquidity. So you take the liquidity and then you have inverse fair value gap, use it as support to trace towards the equal highs, which is buy side liquidity. Simple stuff.
So criteria for good
It's pretty easy if you think about it. You know? It's pretty fucking easy. Julian, oh yeah. Who's that? What's this guy?
manipulation, we've got displacement in the other direction, taking liquid, and then we've got a good target, and we've got violation of inefficiency on the manipulation leg, okay? So we'll go into some chart examples in a second, but these are going to be the three criteria you're going to look at for manipulation, okay? For a range manipulation. And this is generally applicable, but this example right here is a range manipulation, okay? Now we can also do trend manipulation. Trend manipulation is more the same, but it just looks a little different. So this happens a lot on uptrends, not as much on downtrends, okay? So this is an interesting pattern that I've noticed in my backtesting. This is something that happens frequently on uptrends. You'll see a lot of these stop runs, manipulation, and you don't see it a lot on downtrends.
Because
if you have a really long uptrend, you're almost guaranteed, let's say our target is right here, you're almost guaranteed right before the target, stop hunt. Inefficiency, stop hunt. Holy shit, we're freaking out. The market's not actually going to my target. We're selling off 3 huge red candles, super volatile, shit's flashing all over the place. Total panic in the market. Stop losses taken out on these levels. And then, we stay calm, take a couple IFVGs, we chop a little bit up, and we hit the original target, right? So this is not, you have to be careful, especially if you're in a long position. And I've gone over this in one of my videos before, but if you're in a long position from like, say, right here, down here, you're riding this up, you're almost at your target, and then you get manipulated out. If you're in a long position from like, say, right here, down here, you're riding this up, you're almost at your target, and then you get manipulated out. You want to make sure that you're not trailing your stop loss to obvious places. Let me go to some chart examples actually, because this is literally the same thing as this. Like you would want to see, for example, to meet the good target criteria, instead of leaving equal highs at the top of the range.
taking liquid displacement, criteria displacement, good target, violation of inefficiency.
We still want to take liquid, right? We're taking liquid down here, we're taking low resistance liquidity. And aside from just taking liquid, for our good target, we want to get close to